There you go.
Awesome. Good evening, everyone. Welcome to our investment webinar this evening, seminar webinar. And want to get started here, we'll be talking a little bit on the New Horizon Apartments. And one of the cool things, is I would like everybody, think about is like who would love to be able to more than double their investment in 4 years. So this is a presentation or discussion around this is a 4-year hold on this opportunity. Going to get into this as we go. We'll go through a high level, nice executive summary. We'll touch on the sponsor team, get into the property and the location, a business plan and what's been completed on that business plan, the underwriting and performances, and then the next steps as we go. So as I mentioned, this is a 4-year investment opportunity that you will have an opportunity to partake in. I was going to say this is a quick disclaimer. Take your time to read this. But again, we are not attorneys, accountants, or CPAs is the main thing. And all investments do have their own risk, and performance is only past indicators, not future. Here we go on to the executive summary for this evening. I get that. There we go. So jumping into this, Horizons, it's a very well positioned asset. We're going to show you guys some great information on the location, some awesome statistics about San Antonio, and Texas as a whole, as a market. We got into this opportunity at $82,000 a door, which is a very great bargain. And the other key thing is we have it on a loan at a fixed rate of 3.78%. And that loan matures in 2032. So we still have time on that loan. And I'll talk a little more about, we have a supplemental loan with that with the same maturity. The returns on this, again, this is a 4-year hold. We're looking at an 18 to 20% returns and equity multiple of 2.1 to 2.2 with an average cash on cash of 8%. So if you're interested in knowing more on these 204 units, here's a little more details on our projected investor returns. So as I said, it's a 8% cash flow. So we've put up here at the top, this is the average cash flow. Here at the top, you see how the returns actually work out for someone that were to invest $100,000. You come across 100,000 as the investment per year, cash per year, cash flow, cash per year, the percentage of that over each year, and then the total return on that. So right now it's, year 4 is 210,000. That includes the sell profits from the sell. So the total return is about 123,000. So that's about a 2.2 multiple. So that's how we get to this 2.2 multiple here. That same correlates to an 18 to 20% IRR over that same period of time. There is a 7% preferred return. So what that means for sure is two things. You invest in this deal, your money goes to work for you on day one. So you would be, earning 7% as that goes forward. And then as cash flow, ramps up, then you'll be earning more than the 7% over time. So we do have a cool bonus opportunity. Anyone that wants to invest over 250,000 or more, will get a 10% bonus. So the multiple goes up to over 2.3. So just an example of that is a 250,000 investment in 4 years. This is not guaranteed. This is a calculation based on the business plan and pro forma. But that 250,000 over 4 years would come to 575,000 returned to you. We are, yep. Sorry, going ahead here. So there is still tax benefits. There's tax benefits and depreciation still. We don't know if that may go up depending on what happens in the current regime, but there still is a base that we do know about. So it's currently 40% for 2025. That ramps down to 20% in 2026, and then 0% in 2027. So right now, 2025 and 2026 are your last current chances to be able to get bonus depreciation opportunity. So with this investment, you would get approximately 33.5% this year for bonus or for the bonus depreciation over the remaining term of the investment. So that equivalates to, if you make $100,000 investment, that would equivalent you to about a $34,000 loss on paper. So it's basically you'll get your K1 and you get a depreciation shows you actually lost money, even if you earned funds during that time in cash and cash flow. So really is a great time to build your depreciation now before it goes away. So want everybody to think about that, focus on that. And as I go through the rest of the presentation, please post any questions you have in the chat, and we'll get to those to be sure we answer and get all the things answered that may come up. Sorry, I was just looking at the chat real quick. So let me go ahead here. There we go. So why would you invest in the New Horizon Apartments? Why invest in Horizon? The attractive loan is one of the key things to start with. So we have, as I mentioned, the 3.78% fixed rate loan, but we also did a supplemental. So there's a blended rate. So we have a supplemental we did of 2.27 million at 7.77%. So the blended rate is about 4.49%. That's a blended weighted average. So as you guys check that out. The second piece that's really cool for this is the timeline and the risk adjusted. This is a risk adjusted opportunity now with the funds going to work for you immediately. So they don't sit in escrow waiting for the property to close. They'll come to work for you immediately. As I mentioned, it's a 4-year investment, looking, to 2025 to as the first year for you in this investment. And the property is closed and it's under operation currently. Again, the additional things is it's extremely well positioned for rent escalation. So far, we have increased the rents by 8% since takeover. The other is in the 2025, we've increased occupancy by 10% in 2025. So it's very attractive basis, stabilized financing, and a 4-year opportunity. A little bit of cool stuff on San Antonio and Texas as a whole. Just, absorb, read some of this stuff that you can. We've highlighted a few things, but Texas being the 8th largest economy in the world is just really amazing. #1 exporter for 23 years in a row. Is San Antonio? This is like as the fastest growing city in 2023. So over 22,000 people moved to the city. The other big thing, San Antonio economy is continuing to grow. So it's seeing growth, which is really important, for the ability to, be able to have rents coming up, filling up the space. There's not a lot of building going on in San Antonio. So what there is there as far as apartments go. There is a lot of infrastructure building going on. Every time I go there with my son, Kyle, we drive in, drive around. It's like new highway here, new direction here, a lot of stuff happening in San Antonio. So it's really, really a lot going on there. And it's the seventh largest city in the US. And you guys will say, no, that doesn't make sense. But it is the seventh largest city. It's not an MSA, it's the seventh largest city in the US. Over 1.5 million residents there. So just amazing stats and things happening in Texas and San Antonio as a whole. A little bit on our sponsor team, and as you look, you get to see this is the property itself. You see the new leasing signs. I'm going to talk about things that we've already done to the property, but I'm also going to talk about some phase 2 things that we're finishing up at this time also. So our team is myself, Mike Bailey, Sanjay Agarwal, who's part of Massive Capital, has over 8 years of full-time experience as an active investor, gone through multiple cycles of deals himself, and he's very strong in the financial side of the business for us and asset management. Shreyer Khan, also one of the principals of Massive Capital, has been a sponsor on many deals and units, MBA from Rice in financing, and also, has worked in the corporate world for many years prior to this, to Shell primarily. And then myself, co-sponsored over 3,000 units across the US, 300 or more in Houston and Dallas. And again, a corporate background from ConocoPhillips, oil and gas for many years as well. So over 21 deals, 7 full cycle, and 210 millions of assets under management. We have our team, Trevor Thompson, with us tonight, and Jasmine Salinas with us tonight on the call. And they will be a lot of times who you're discussing, talking with about everything that goes on, if it's not myself. Here's our track record a little farther. So we do have unit properties in Denver, Colorado, Georgia, and North Carolina, as well as what we have in Dallas, San Antonio, and Houston. So now let's dive a little further into the property, and check out this. This is a little playground that was added. It gets a lot of use. There's a big family community, so we see a lot of kids out there. A lot of the time, we need to get a few of our pictures with the kids out there, but there's a thing about you're not supposed to have the pictures with kids, so we go with this one. We need to maybe Photoshop some AI people in there or something. So the property overview, workforce housing, workforce location. That is what it is. That's what we're focused on in this, but we want to make it nicer for everyone to live. Like, we want to make the communities better. That's one of our goals. So you'll see a lot of the things we've done already to do that and improve the whole process. It is 204 units, San Antonio, 1974 build. Location-wise, I-35 coming out of San Antonio, heading out, and then it's not far. You actually get to run it up to I-10. So it's kind of like runs out over to Houston, runs up to, then you got other ways you run up, to Austin and, eventually to Dallas as well. So great accessibility, great location. Horizon right here next to the HEB distribution centers, Amazon Fresh over here, and a lot of other cool spots. There is an In-N-Out there, HEB Kirby. Oh no, that's not the, sorry, Frito-Lay down in here, and the other distribution centers here. So major employers in there, and that's why this is beautiful for the workforce housing opportunity. On to the business plan and what's been completed. So we have owned and operated this for 1 year, and we are in year 2 of optimizing and targeting the process, and then year 3 to 5 we'll be working through cap rate alignment and final planning. So you'll see as I go through the next few slides the type of CapEx work, because this is a value add. So in order to add value, you need to do 2 things: improve operations and get CapEx work done to bring in new tenants. And part of improving operations is you have to go through getting some tenants out, which was through some evictions and downturn in the occupancy, which we've now turned that back around, and on the occupancy increasing, as I mentioned earlier. So here you'll see some beautiful changes, right? Went from a pools that you couldn't even use. They were inoperable when we got there. They were really terrible shape. I mean, very, very bad condition. These don't even show how bad they were. So now very usable, beautiful settings, great time for, people and families to be out there playing around, splashing around. The same, just it's such a, I like sitting out here when I go visit. It's so peaceful and calm out there. The other thing is we've installed the Amazon lockers, so it's added value, but it's also added, service for everybody so that they can have their parcels there, in a controlled manner that they have access to. So there was this fighting cage or something that was in front of this property when we got there, and it's like, what the heck is this thing? And we said, let's get rid of that. So we ripped this out, got back to just a nice looking front view. And you'll see, we just continue to increase our signage, numbering, accesses, everything is continuing to be improved. This is continued on our phase 1. I'm going to talk a little bit about phase 2 as well. So we did have some requirements by the lender and things that needed to be upgraded. Roof replacements was a piece of that that was required by the lenders, and some parking lot repairs and striping that have been completed, and a little bit of surfacing in different spots. So beautiful looking outside area now. And then we continue to update and upgrade the interior units as well. So you'll see, the interior units being we're doing the full upgrades on units as they come available. Not every single unit's getting upgraded, but as they come available, we're doing upgrades. We do want to leave units at the end of the process for other people to, when we exit, for them to do their upgrades on and have a little bit of what they call meat on the bone. More beautiful signage. See that went from the Horizon here to the New Horizon. Nice color, beautiful coloring. Just, pops out for people driving around and driving by the area. There's a couple different streets that people can see the signage from. This is one of the main roads here, and then there's a side road on the other side. A little more beautiful signage being completed here, and some fencing that's just made it pop and feel a little better. with this fencing and you'll see the fencing. So we have the property now. We're about to finish full enclosement of the property. That's part of phase 2. So this will be a fully gated community. So it's a beautiful opportunity for people that, if they want to, concerned about the kids getting out or whatever whatever. But it's just going to be a nice, comfortable, gated community, with entryways and both from a doors that, walk through doors as well as the gates for cars entrances. So all that's being finished up in phase 2 of the process. So what is our exit strategy for this property? So the exit is from here another 4 years from now. The plan is we're targeting this NOI of 1.59. I was reviewing the P&L a little bit as well. We get to this about year. We actually get to this in another 3 years. So really, we're going to get to this NOI. We should get to this NOI in 3 years. And we're targeting at a 6% cap rate as well. So CoStar has projections for cap rate over the next 5 years that we've looked at, so it's come down some now already, and continues to come down over the next few years. So based on that, we see that we're on target, online with what we're seeing at CoStar. We did, if you look at number 3 up here, we did a number of iterations that you can look at. So you can see at a 6% what that does with the 1.54, 25 million. And if you went to 6.5 at the 1.54, you're 23 million. So the math you can kind of get, you guys will get a copy of this presentation. But like we said, with this NOI here over on the final year 5, sorry, this is year 3, 4, and 5. Apologize. Year 5 over here, we get to there, and that has a total proceeds of 6.73 million after we paid back the debt, and we paid back the equity basis. So what are the next steps for you? This is accredited only investors. So get with our team, find out, talk to the team. Hey, am I accredited or not? Do I qualify for this project? Review the complete offerings in the portal. Scan this QR code to get to that. Talk to your sponsors and review. And, if you get any questions, the sponsors will review and accept any offering documents. And then you wire the funds, or you can ACH the funds directly. Also, did I mention that we do accept IRA funds? So if you've got an IRA, 401k, we can accept those funds as well. And thank you for that. Just a few things. Again, closing, I mentioned the closing risk is mitigated. So there is no risk of us closing or not closing. The money goes to work straight away. Takeover risk has been mitigated. CapEx risk is almost mitigated in the fact that we're probably, majority done with our CapEx, and we have a little bit of CapEx left to do. So that is the last of this part. Again, we have the QR code here, and if you guys want to come visit anytime, let us know. Follow up with us. Come sit by the pool with us or Trevor sometime, and we'll help you out. So was there any questions? And I see Trevor as well put links in there to book a call, and there's going to be a property tour, but any questions at all? I didn't see any questions in the chat.
Hey, Michael. Sweta here.
Hey, Sweta.
Hey, thanks for the presentation. So I'm a newbie. I just joined the Big Dog program, and that's how I came to know about Massive Capital. And I had a chat with Trevor over the weekend. Um, so my question is, I understand this property has been acquired a year ago, and you must have already raised the capital needed from the investors. So where would I mean,
And
this
so
this
no, we did not fully raise the capital. That is part of the reason for this
opening up.
additional funding is so the capital we're raising is to replace funds that were used to close the property.
Like,
And at the same time, there is no dilution of previous investors. And with the 4-year hold, it makes the returns very similar to the previous returns, just with a little lower risk at this point in time and a shorter timeline.
I see. Thank you. Another question. Let's say I'm interested and I go ahead with the investment, and maybe a year or 2 years later, I want my money back. Is like, what would be the options for me?
So usually the options are limited in this type of investment. The whole reason is these types of investments that is letting people know the timeline and the expected time to hold. There's certain cases of somebody's like, hey, something has gone, way off the rails and I need this because of hospital bills and stuff and this. But we want people to know that the investment should be there for the duration of the 4 years and that, we're open to talk about things, but that's usually the exception rather than the rule to return
Hey,
funds in the middle
hey,
of the investment.
hey, Mike, this is Sanjay.
Oh, hey, Sanjay.
Hey, can you guys hear me okay?
Yes.
Okay, good. Hey, Shweta, how are you?
Good, good. Thanks.
Good. Hey, so, these, especially this specific investment, these are considered illiquid in the
Mm.
sense that these are not traded like your stocks on the market, even though this is, you're buying the shares of an LLC here, but these are illiquid mostly that, so if you invest with the goal, whenever we exit, that's when the exit or refi, that's when the investments get paid back. And what Mike was saying, like in exceptional cases, somebody has a need to really, have the capital for emergency purposes. In that case, we have options to go to the existing investors and see if somebody wants to buy out your share, whatever your share is. But again, the challenge always is at what price? Because this is illiquid, not traded. You may say, well, I've been in this for 2 years, 3 years. I would like my 100,000 to be back 130, but somebody may offer for that 100,000, 80,000 or 110. So that's where it becomes further complicated to find a buyer. So, and even if you find a buyer, if they are not accredited, then, as GPs, we have to kind of make sure SEC compliance is there. We won't be able to allow them unless they're accredited. So, so it gets a little complicated. I think we have had cases where somebody was able to cash out theirs by finding somebody and all worked, but these are considered illiquid investments. That's one of the reason returns, our projected returns are a little higher because it gives the stability of like we go and operate and do what we need to do to execute the plan. Does that make sense, or any further questions?
Yeah, I think, yeah, you pretty much answered my question.
Okay, good question. Good question. I'm glad you asked that now. because I've had a couple people call a year later and they're like, "Hey, I'm buying something else and I'd like my money back." And like, I'm not sure that's a good idea, especially if you're just buying something other investment, right? So good, good. Jason, you have a question?
Yes, I was wondering how much are you looking to raise? What's the total goal at this point?
Mike, I can answer, then you can add if that's okay.
Sure. Yes.
Yeah. So Jason, at this time, our total raise is 7.2 million, which is what the PPM, the private placement documents, kind of allows us to maximum raise that. Out of that, I believe we are left with just under 2 million to finish that. Or maybe it's 1.8 at this time. I think we had a couple commitments last week, so it's a little moving target, but in that range is where we are left to raise to finish the whole thing.
Wonderful.
Yep, that's correct. Oh,
What
yeah. Same for Oana. Yes, so that was the same question Jason just asked.
No, I have a question. Can you hear me?
Yes,
This
Thomas.
is Thomas. Yeah, so I already invested a little bit. First thing, I was wondering so in your portal there is no beneficiary that can be kept. So is there a plan to update that information, because it's a long-term investment, so obviously it has to be there, and I don't see it. Is there a plan to do it?
Okay. Hey, Jasmine, please put your link in the chat to book a call so Thomas can follow up with you and follow up.
Already spoke with the Jasmine on that.
Okay, well,
And the Jasmine followed up, but it didn't happen.
Okay, let's rebook it. We'll get with Cash Flow Portal and talk. Let's Jasmine, book the call and add me to the call with you with Cash Flow Portal.
Okay.
Okay.
But at a high level, Thomas, in terms of beneficiary, right? That's the question.
Yeah.
Mm-hmm.
Just at a high level, just like any other asset, right? Like we have to follow whatever, like if you own real estate, and something happens, that process gets followed, right? Either you have a probate, or if you don't have a probate, you have a will or a trust. So like we're bound by the same thing. So we would get through our attorney, have them follow, and if there's a clear will and whoever ID they provide, they do clear, it goes to them. If they don't, then they don't. So like there's nothing new here. Just like any other investment, it's a similar process for beneficiaries. But we can schedule a time to go into more detail of that.
Yeah.
I've had two cases. Yeah, I've had two cases where we had to go through that, and I can kind of walk through that, or Jasmine can.
Yeah, I got that. Information. So
Yeah.
I was thinking in that way too, but it will be much more easier if that was the name I can provide. So I was trying to see if that's a possibility. Yeah, definitely our trust will be what it is.
Okay.
Thanks.
Your WhatsApp showing now, Mike.
Thanks, Trevor. There, I was trying to get back to the presentation.
Somebody in the chat
Jason,
asked
you
about
still have a
AI.
question,
I'm
or-
real.
Jason, we get Jason's question. Go ahead.
Somebody in the chat asked if I was AI direct message. I'm not. I'm a real person.
All right. So again, if you guys are looking for an opportunity, if you'd love to like more than double your money in a 4-year opportunity, And, you know, if you've already invested, want to reinvest, want to increase to your 250K or anything, get a hold of Jasmine or Trevor. You can book a call with them. They have their call booking there in the chat. You can go directly to the portal, sign up, use the QR code here at the upper right.
Yeah.
And,
Hey, Mike.
yeah. Was there another?
Yeah, looks like Jason may have another question, but
Oh, do you have another question, Jason?
Yeah,
Sorry.
I have one more question. I didn't want to interrupt. What questions should I ask my CPA to understand how the bonus depreciation would apply to my taxes? I know you guys aren't CPAs, so I know you can answer, but I'm like, what would the questions be that I should ask of, like, does it, do you have to be a real estate professional? Does this apply to like portfolio income, or is it like passive income? I'm a little bit confused of, how what I should ask my CPA about.
yeah, Jason, the question to ask is, if you have a Schedule E loss, can you take benefit of that?
Okay, Schedule E
And-
loss is
yeah.
the question.
Yes, and what I can do is I can send you like one of my other investment K1, so my personal K1, keep it to yourself. You can share that with your CPA and say, hey, if I get a K1 that seems like this, which shows which boxes. So the box numbers are different, like which box has losses, which box have no losses. Will you be able, based on your all the other personal financials, will you be able to take advantage of this depreciation? Will that reduce taxes for you? That's the question.
Okay.
So Jasmine, if you could in one of our WhatsApp groups, text me Jason's email. I'll email Jason one of my K1 from previous deals from a few years ago.
Thank you.
Sanjay, when will distribution start? A question from Ed Sarlis in Rosenberg.
So Ed, we are expecting, as per our current projection, by end of year 2, which would be December 2025, January 2026, sorry, is when we expect to have cash flow positive. And we have a little bit of a dependency on a couple variables that we are navigating through right now. We had a water leak, high water bill situation, which, these Class C properties happens. I think we have identified a couple areas that may be the cause for that. So, that's literally water going down the drain. But anyway, I think we have a couple things that we are trying that will resolve it. But end of January 2026, we expect to be cash flow positive and expect to have some distribution. May not be a lot, but some distribution. So if it is January 2026, we become cash flow positive, then the actual distribution would be March or April, that we do on a quarterly basis. 2026 is when I would expect to start this cash flow.
Thank you, Sanjay.
Year from now.
Thank you, Sanjay. Great. No other questions tonight. If you guys are interested, follow up with.
Yeah. Hey, Mike.
Go ahead, Sanjay.
Yeah. One more thing.
Yeah.
So can we do a few polls or raise of hand from everybody who's attending, just to kind of get an idea for us,
Yeah.
similar to we do on our Shark Tanks and other things. Like, how many people like this deal? Type in 1 or 5. Can you do some of those questions and let's get some feedback from the audiences here?
Yeah, this would be great. We'd love to have you guys' support feedback on this. Thanks, Sanjay. It's a great thing to ask. So we kind of like use a 1 to 5 scale. If you guys will participate with us, just put it in the chat. You know, a 1 is, you know, I have no interest. A 3 is, I'd like to get a little bit more information. 5 is, you know, I like this deal and interested to move forward. Could you guys give us a, you know, 1 to 5, if you would, give us so we can, you know, gauge where we are and the next steps that we're making. Thanks, Sanjay. Great idea. And if anybody would put also in the chat, like what is there one thing that stands out to you about this that is intriguing that you like? Is it the timing? Is it the amount of return? Is it the risk reduction?
Someone had asked a question about a 1031, not at this time into the deal. They can only happen when you're first arranging a deal.
Leroy, was that Leroy?
Yep.
Yeah. Let's have a side discussion. If you would, let me put my link in here. If you wouldn't mind, we can set up a call and discuss that if you're open to that.
Sure.
And yeah, so 1031, while we can still do it currently, it becomes a little more complicated since we have closed on the loan, existing other investors and stuff. But you know, there are options. So depending on the size of the check and what Mike said, let's schedule another time to go over it. There are options we can explore to see if we can help the 1031 party, the funds they have. So we have some creative ways also.
Okay, thanks.
Okay. Great for the feedback as well. Was there any?
There's some great feedback in the chat. Mike, you want to read out summarize those or something?
Yeah, you know, some 3s, 4s, 5s. Like the, you know, the 4-year exit. I think a few people like the time frame, the 4-year time frame. Very strong 4-year turnover, better than most. I like the 4-year exit. Lance, one and like it. I like it. Not a love big deals. Okay. Risk reduction and shorter time frame makes them more appealing. Great. Yeah. So the time frame. Ed joined us earlier in the 506B, so I'm glad Ed's still there with us. We're, you know, working, you know, making sure that we keep the current investors whole and getting their returns, you know, to be where we expected them to be. So that's great. Cash flow not distributed till year 1. Is not distributed in year 1. Taking control of the property already.
Yeah.
And stabilize it.
Yeah, Chris, can you explain what did you mean, or did you have a question? Cash flow is not distributed in year 1. I'm not sure, Chris, you are in a position to speak or not. If not, that's fine. We can connect afterward also. But generally, if we have excess cash, you know, we would distribute.
Yeah, he commented, Sanjay, Chris commented, I'm looking for cash flow in year 1. So
I see.
So
I got it.
So we're distributing towards the end of year 1 of this
Of the new investors, yeah.
of the new investors. For new investors, we're distributing in year 1, but it's towards the end of year 1. And
then- For those that join late, we will send out a replay of this.
yes. And Alex, the minimum investment has not changed. The minimum investment says currently 50,000 for this. We'd love to do bigger. That's why we offered the 250. We've had a couple investors come in on that 250 bonus, getting the 10% bonus on that. Jason's asking as well, Sanjay, the break-even occupancy level. I have a number, but I'd rather let you address it since you've been heavily into this side of it.
Our break-even is around 87-88%. And as we implement the other income initiatives, that break-even goes down. But at our current other income levels, it's about 87%.
And I'm not sure who the Zoom user is.
That's what I was going to ask, because Zoom user is interested in 1031 discussion also. So please let us know or type in your email or phone number here. Or Jasmine, do you already have that? Then let's take a note and schedule something on the calendar now.
So, yeah, if the Zoom user wants to speak, are you able to get on like?
Okay,
besides
there's the
chat?
email address that is there.
Oh, there we go. Okay, all right. And then, yeah, if you want to as well, anyone else, you guys can book with me, Jasmine or Trevor. All of our links are in there to follow up on any questions that you have. This was awesome. Great conversation tonight. And those that we'll be following up with, everyone that was here and has some interest in this. So we'll get a hold of you guys and do some follow-up with y'all starting tomorrow. Sanjay.
Thanks,
Trevor.
everybody, for joining. We really appreciate it. And be sure to reach out to myself, Jasmine, or Mike.
Hey, Mike, you have another question?
Oh, I don't. No.
Okay.
I
Okay.
was just looking. Sorry.
No, that's good. That's good.
All right. All right. Good night, everyone. And thank you for joining us here Thursday evening. Appreciate it.
Thanks, everybody.
Bye.
Thank you, everybody.
Thank you.